India has the world's fourth largest coal reserve. It is the second biggest producer of the fossil fuel behind China and is home to the biggest coal miner, Coal India, which accounts for 80% of the country's domestic output. The mineable capacity of already allocated coal blocks is around 15% to 20% higher than the expected demand in 2030. So why, year after year, India's power plants face coal shortages that lead to widespread power outages, leaving parts of the country in the dark and industries in a limbo? There are several factors. India has had a long-standing policy to minimize imports of coal. In February 2020, Coal Minister Prahlad Joshi had said that the country would stop importing thermal coal from 2023-24. Joshi had said the Coal Ministry would coordinate with railways and shipping ministries and enable Coal India, captive and commercial miners to evacuate more coal by 2030. But despite efforts to increase the supply of domestic coal, there was a gap between the demand of coal and its supply, and the coal stocks at the generating stations are depleting at a worrisome rate. Now, Power Ministry is blaming declining coal imports for the current crisis. In 2018-19, 21.4 million tons of coal was imported for blending, 23.8 million tons in 2019-20, and in 2021-22, it fell to 8.3 million tons. Coal inventories at power plants have declined by about 13% since April, to the lowest pre-summer level in years. And for the first time since 2015, Coal India will import the fuel for use by state and private power generating companies. The Power Ministry said the decision was taken after nearly all states suggested that multiple coal import tenders by states would lead to confusion and sought centralized procurement through Coal India. The centre faced pushback from states as imported coal is 5 times costlier than the one mined domestically. Recently, the government also stepped up pressure on utilities to increase imports to blend with local coal. It has even warned of cuts to the supply of domestically mined coal if power plants did not build up coal inventories through imports. But the Power Ministry on Saturday asked states to suspend tenders that are under process. Despite record production, Coal India's supply has not been able to meet the demand. In April 22, the company registered a growth of 27.64% by producing 53.47 million tons. Former Coal Secretary Anil Swarup told Washington Post that Coal India's production stagnated in the last few years because of a failure by the government to appoint senior management and fund mining expansions.
One major reason for the coal/power crisis to reoccur every year is that there is a mismatch between the three key departments of the government, which is coal, power and railways. While the Power Ministry claims that it had submitted a full-fledged plan about how much coal it will need, the Coal India Limited, which is the national miner, has not been able to meet that demand. Meanwhile, Coal India claims that it has been giving as much coal as it needed. On the other hand, it also mentions that last year, when Coal India had surplus coal, none of the power units came forward to stock up more coal. In middle of all this, Railway faced the most ire from both the departments. Coal India says that there are not enough rakes being allotted to them for supplying coal. Power units, especially privately owned and state government-owned generating companies, claim that not enough rakes are being given to them so that they can transport coal to their generating units. Meanwhile, the pressure of mining and supplying coal in the country lies solely on Coal India Limited. Since 2015, the government has auctioned coal mines to private companies and also allotted coal mines to state-owned companies and also state governments. But the production from these mines have been underwhelming. Alongside, the imported coal-based power units, which are mostly restricted to the coastal areas, have not been functioning for several years now. While some units are involved in litigation over the state government's over tariff, others are not importing coal because of the cost.
Coal India's output has grown slower than the captive mines awarded over the last 6 years. Between 2020 and 2022, production from captive mines jumped by 38.5%, while Coal India saw a tepid growth of 3.4% according to government data. These captive mines were awarded to private companies and state-owned utilities over the last 5 years after the Supreme Court in 2014 scrapped all coal block allocations made over the past 2 decades. Last year, 3 tranches of coal auctions were held after a hiatus of 2 years and 9 blocks were successfully awarded. In September 2021, the Union Ministry of Coal issued a stern warning to captive coal block owners, saying their mines should ramp up production or face regulation in coal supply from Coal India. The ministry observed that production from these mines was below target. Of the 43 operational coal mines awarded to private companies in the power, steel and metal sectors, not a single one is meeting its targeted annual production. On May 6th, Coal India said it will offer its 20 closed and discontinued underground coal mines to the private sector to reopen and and bring into production on a revenue sharing model.
The central government has an ambitious plan of double-digit economic growth of the country. This means that electricity demand in the country will also grow in the same proportion. But the supply chain, it seems, is not ready for this kind of growth. The state-owned power distribution companies continue to make losses, which means that they are unable to pay to the power generating companies, which in turn leads to payment defaults to Coal India Limited. Payment defaults across the supply chain impact the supply of coal and power. Like we have seen in recent months when there was allegedly shortage of coal, several states resorted to power cuts rather than paying upfront for more coal and more electricity. Going forward, if the country wants to achieve the economic growth it has planned, the electricity supply chain in the country needs to be fixed, starting with the state-owned power distribution companies, which need to be more accountable and more financially stable to avoid a crisis like this in the future.
Meanwhile, the railways is grappling to balance demands from the thermal power industry for faster coal supplies with the demands of other industries. It has to keep rakes ready to meet the rising demands for just about every other bulk commodity, from cement and steel to sand and food grains. The strained balance sheets of DISCOMs have consistently triggered delayed payments to power producers, often affecting cash flows and disincentivizing further investment in the electricity generation sector. For the second time in 2 years, the Union Power Ministry notified a scheme for DISCOMs to defer their dues towards the power generating companies. With the dues of the DISCOMs touching a record high of 1 trillion rupees, the ministry has proposed a scheme to liquidate their dues with 48 monthly installments. Strengthening the value chain of the power sector will ensure that coal supply-demand mismatch is resolved in the long term.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.